Hello, everyone, and welcome to the BBA Show, Episode 9. This is Adam Wyatt, also known as AKW Analytics, and I'm here with Rich, as always. How you doing today, Rich?
Doing great, Adam. How about you, man?
Doing good, doing good. Bitcoin looks like it's wanting to bounce here a little bit, which is nice after all the drama over the past week, right?
Yeah, no kidding. We got a lot to talk about. It's been a little bit since we got to chat.
It has been a while, and obviously the headline over the past couple weeks has been Satoshi Nakamoto and this Craig Wright reveal, quote unquote. And it was interesting. The most interesting thing to me about the whole thing was how the market actually reacted, which was not much. It was kind of just continued in its consolidation pattern and didn't really pay much attention to it, which I think was the right reaction, given that all how it played out. The market kind of perceived this correctly right away, in that we can't really know that this guy isn't Satoshi, but nobody's really ever going to believe that he is. So, it's kind of like, who cares at this point?
Right. I mean, the one thing he would have to do to prove it to me, he won't do it. And that's move the coins from the early blocks. What was it, block 1 through 9?
Yeah,
Like if
nine was
any,
the one I kept hearing.
yeah, any of those coins, if he just moved just the smallest fraction, that's it. But he won't do it. So it hasn't proven anything to me.
Yeah, and he says it has to do with courage, and I think it has to do with cryptography, but only time will
Right.
tell.
Right, exactly. He got emo on us and decided to bow out. But I saw like it was like a tweet or a headline or something, and he got what he wanted, and that's for at least some people to believe that he's Satoshi. At least the question to be up in the air, and I think there, as a side note, it kind of benefits him on some of his businesses. I know he's in trouble a little bit with the Australian tax, whatever
Yeah, the tax office.
yeah, and the equivalent of the IRS. And
Right.
I don't know all the details, so I don't want to comment too much on it. Just I know that it benefits him if he is Satoshi, because he's made some commitments with Bitcoin that is up in the air as to whether he actually owns. And it helps him if he is Satoshi get out of that tax situation. So I could I would not be surprised if this is just a whole ploy for him to get out of trouble. He uses the sort of opacity of the situation to kind of bail himself out of trouble.
Yeah, I totally agree, and that makes perfect sense. The part that doesn't really make as much sense to me is how he got what some would consider some fairly reputable players in the space to defend him, like he's a like a godlike creature or something. It's kind of bizarre how
Right.
some guys that I really had a lot of respect for came out and go, no, this is the guy. Even kind of after all the hullabaloo and that all died down, they're still going, no, this is the guy, this is the guy. And he must be really, really convincing.
Right. Right. And I mean, it kind of reveals I guess the awareness and the skepticism of the people, or lack thereof, of the people he convinced, right? Like it better be like a really convincing case, and not just like convincing like he is a lawyer and argued his case, but like he showed me 100% foolproof evidence that he was Satoshi, if I'm going to go into public and claim that this man is Satoshi.
Sure. Right.
And it doesn't look like they applied that level of skepticism to the situation. We're talking about, I guess, John Matonis and Gavin Andreessen, right?
Yeah. Yeah. And then there's a couple other guys, Ian Grigg and
Oh
uh,
yeah, right.
JVP Von Perling. These guys kind of that, have never really been huge in the Bitcoin space particularly, but they all have, a background in computer science and cryptography and have been involved in this kind of stuff for a while. So, I mean, they do have somewhat of a reputation, but you would think that given, if this was the beginning, yeah, I get it that they, maybe they don't really care, whether it's him or not, but given the litany of reputations that have been destroyed on people trying to claim they found Satoshi, or they are him. It doesn't seem like they weighed the risk reward properly.
Right.
And
Absolutely.
especially without the convincing evidence. I guess there was some kind of message signing that did happen with Gavin, but the circumstances I read just made it seem really sketchy.
Yeah, exactly. So that's what I mean by the level of skepticism that's necessary. I mean, it needs to be 100%, or else it's not Satoshi.
Yeah,
Move the blocks or GTFO. You know what I'm saying? Or move the coins or GTFO.
that's right. Well, this will all I think for now it's pretty much dead, but apparently something will happen in 6 months with the quote unquote tulip trust. I don't know if anybody really knows if that's an actual thing or not. But I think I heard something about it in 6 months. They'll something about a trustee unlock. I don't know. It all sounds more like more publicity kind of stuff. But I
Yeah.
wouldn't be surprised if it came up in another 6 months just to rattle the market a little bit or try to.
Yeah, I agree. I think it was September that they're talking about. I don't even know what it was because I stopped paying attention to it after he bowed out. So I just know that there's something coming down the pipeline from the Tulip Trust, supposedly in September.
Quite an an interesting name choice there. Me and my brother were talking about that.
Yeah, it's ironic.
Right, isn't it? So anyway, but yeah, it's good to see that the market didn't really bow to the pressure. All the media was on it. And I feel like whenever they cover Bitcoin, even though the whole thing was about Satoshi, these guys always find a way to insert some crap about civil war and threats to decentralization and core versus classic and all this stuff. Just to so it's never really purely good publicity, no matter what.
Right.
So it's good to see the market look through all that and just really not care. I mean, it really is starting to feel like a bullish market to me for sure. Might not be ready to break out yet, but I got a feeling we're pretty close.
Yeah, but at the very least, we're not breaking down yet. So, or I don't want to say yet because I don't think it's going to happen because of what you're saying, right? Like we've already experienced a really brutal kind of the last week or so, and it seemed to stand up pretty well. You want to kind of take us through the chart there?
Yeah, this just feels like accumulation. I mean, you can see the moving averages start stacking to the upside here, which is a good sign. Now, this is a 4-hour chart, just a pretty popular chart. But you can see all these dips down into these MA support areas and stuff. All these get rejected. And on pretty decent volume, you can see, I mean, the bears are trying to break this thing down, but they keep getting rejected and not even able to watch stops down below the old low. See, they did it here. This low is 435. This one was 436. See, they couldn't watch those 435 stops, and they tried again here, 445.01, 445.91. I mean, you're talking about cents. I mean,
Right.
the bears are really trying because if they know if they break these levels, you can access some liquidity and run some stops and get the technicians like me kind of worried. But the bulls just want to buy this thing, which is why it feels pretty good.
Yeah.
Price action is good.
Yeah. Can you show us where on the chart about the time that it was announced that Craig was Satoshi? Because I felt like the bears tried to make a move at around the same time, and it didn't really stick.
Yeah, that was. I mean, it was one of these. I don't know if it was this one, but
Yeah, I can't
it
remember
might
if
have
it
been.
was the first one or that one you're on right there.
I think it's this one right here.
Yeah.
This was like it was like a Sunday night, Monday morning. China was on holiday. I think Britain was too, or something. So there wasn't going to be much liquidity. And that story came out, and they just slammed it down in the morning. And then by the afternoon, it was already back up 50% from the lows.
Yeah, exactly. And I think that's a really good sign of just a lot of support right there and a lot of good accumulation happening.
Yeah, guys went in here. I mean, it makes sense. I mean, we'll talk about this in a second, but the macro environment just continues to get more bizarre, and I have a feeling that the further this train keeps running, the more people will be attracted to something like Bitcoin, almost because they have to be.
Yeah, I agree.
So anyway, before we get there, I just wanted to touch on this. We're not haters of Ethereum at all here at BBA. We like it. We like the idea. We have some. I've used the wallet recently. It's a little bit hard to use, but it's still relatively new. But and the market actually looks pretty bullish. But the most interesting thing about Ethereum, in my opinion, is this DAO thing. I mean, everybody's talking about this DAO, ICO, this token creation. Now, this is supposed to be a kind of a token-based governance model that runs behind Slockit, Slock.it, which is an Ethereum-based smart contracts platform, I think, kind of economy of things kind of thing. Anyway, it's pretty confusing. If people want to look into it more, all you got to do is just go Google it, and there's tons of info. But it's not easy to understand. But I mean, look at how much this thing has raised.
Mm,
Uh,
that's just insane.
in 10 days, I believe it's been a little bit less than 10 days. They've raised 54.55 million US dollars equivalent in Ether. They're accepting Ether in the fundraise. So, and just for some reference, Ethereum, the project itself, when it did its fundraise, its ICO, total through the whole thing, they raised about 17 million, maybe 17 and a half million. So,
Holy cow.
we're already 4x almost that number, and we still have 15 days left in this thing. So, I don't know what this tells me. We were kind of chatting about before the show a little bit about how this is a very interesting concept and could be the start of, some really interesting things as far as, not only governance, but raising money in general in a decentralized way. But $54 million in 10 days feels a little bubbly. I mean, do you have any thoughts about this?
Oh, absolutely. I mean, it's just a lot of hype, buying the rumor. There's probably, I think we talked about this in the Slack, every other situation like this where we've had an ICO, there's a big pump and then a huge dump.
Yeah, right. When it hits the exchanges, man.
Yeah, when it hits the exchanges. And you said, I think you mentioned that Ethereum had when the ethers hit the exchange, they had a similar kind of fallout, and then there was a recovery, obviously, but it's just so much all of a sudden, hitting the exchanges. People are going to go short, or selling this thing, trying to make some money off their initial purchase. I mean, you could look at it kind of like an IPO, right? Like you usually, like when Facebook IPO'd, there was a big run up and then a big drop. It's just how it goes, and those things can be really volatile all of a sudden, especially because we're not going through a sort of market price discovery channel, right? This is just you buy at the price that they say that you should buy, and it kind of creates this huge hype, and then you get the fallout from it once it hits the exchanges when price discovery is actually allowed to happen. So you get a lot of volatility at that time.
Right. And I think, I'm kind of thinking about it now, and I think the impact might even be greater on Ethereum, maybe even Bitcoin too, a little bit. $54 million a lot. I'm sure they're going to sell some of those Ether, for either Bitcoins or for US dollars. But, it's kind of weird. Yeah, Ethereum and Bitcoin, Monero, these are currencies. These are trying to be currencies, I feel like. Whereas when these DAO tokens hit the exchanges, people are going to realize that they're not buying money. This isn't trying to be money. They're essentially buying kind of aftermarket votes or board seats, essentially, right? Like, it's like there's an aftermarket for, if there's an aftermarket for NYSE seats, it would be more like buying something like that rather than trying to speculate on a currency, I think. So maybe, I don't know. I think maybe the impact might not be as great on the coin itself because maybe people won't understand it that well, but there will be arbs going on. So, I mean, there's going to be tons of volatility.
Oh yeah, absolutely. So it's interesting that maybe I don't know enough about, actually, to be honest, I don't know enough about the DAO to really understand what its purpose is and what kind of role it will play. But I just kind of, well, the way I've been thinking about it myself is like, okay, it's a decentralized autonomous organization, and I'm pretty sure that's what DAO stands for.
Yeah, it does.
And so if it's like a company, then a company has shares, and what you're doing is you're buying shares, buying stock in a company, and it's a sort of a speculation until the company creates a product and creates revenue. I don't know if that's their model, but that's just the way I've been thinking about it. I don't know. Do you have any thoughts about that?
Yeah, I think that's it. That's essentially what they're trying to do. So they have these, you can see up here is proposals. It says proposals. So they have these people can submit these proposals, and then the people that own these DAO tokens can then vote on those proposals, and then the most popular proposals get funded. And then once they're funded, there's milestones and stuff I think that they reach or whatever. And then if it ends up being a profitable proposal, they can distribute dividends via the DAO token distribution. So I mean, it is that's what they're trying to do.
Yeah, that's exactly that, and that's really neat. That's a very cool idea. And man, I really hope it succeeds. But what you tend to get in situations like this, it just reminds me of a company going, having its IPO, and you get a lot of volatility in the beginning from the run up in the price because of the hype, and then the big dump when people that have made their money. They just wanted to make a quick buck and bail out. So you're going to get a lot of volatility in the beginning, but it should level out. You know, we don't know we could get some price discovery, you know, pretty soon, but I don't think you'll really get true price discovery until we start seeing whether or not it's functional, whether it does what it says it's going to do, whether it can actually create revenue, and, you know, have paying dividends for the shareholders. I mean, if those are the goals, then we need to see those come to fruition.
Yeah, that's the only way to really do a true valuation on a thing, right? Is once you have a baseline of performance, you know, that then you can extrapolate into the future. But yeah, at this point, it's pure speculation. But you're right. This kind of thing is very interesting. And I mean, you know, I feel like cypherpunks have been discussing this kind of thing for decades. You know, it's just now being able to be done on a technological level, really, and be accessible to people. So yeah, it's cool. It's cool stuff. I don't know if it's, you know, this thing might raise $100 million. I don't know if it's $100 million cool, but it's pretty cool.
But it's really neat. I mean, I think we were talking a little bit about this before the show. I think this could be a new era of venture capital. I mean, we don't have to go through the old legacy system where we have to impress these people who, you know, are riding their high and mighty white horse with a bunch of money, and, you know, and then they buy a bunch of shares in our company in exchange for a lot of money, and we have to split ownership with them. I mean, it just doesn't have to be like that anymore. And so this is a really neat concept. I think it could, you know, if it's successful, then we may just be witnessing, you know, a shift in the way that we, as, you know, organizing individuals, raise money to perform services and provide, you know, awesome products to the economy.
Sure, totally agree. You know, and another thing is that I kind of mentioned before the show again is that not only is this cool and this progress, but I feel like it's kind of being pushed to the forefront because of the amount of insane regulations and you know, financial engineering and stuff that goes on. So you know, people really are looking for another way to deploy assets. This might be a cool way to do it.
And not just regulations, but the cost. It costs so much money to IPO. It costs so much money to even get, you know, VC funding. I mean, there's a lot of costs and a lot of research that goes into that. That's, you know, it's just insane. So this could enable Joe Schmo in his basement to create an awesome product and fund it through, you know, an ICO like this, and get to skip all that.
Yeah, absolutely. Excuse me. Yeah. And I just read an article actually the kind of thing about this is that this DAO thing is not, it was kind of the brainchild of some unknown person. Essentially, this contract was put on either Slock or Ethereum, and then some people ran with it. But this initial idea of this particular kind of structure for the DAO, I think, was just put anonymously on one of these blockchains. Which I bet it was
Craig Wright.
Yeah, it was Craig Wright. Right. Yeah, right. Yeah, right. Okay. Yeah, I'll believe that when I see it.
Right.
So anyway, yeah, that's cool. That's, you know, I think again, this is all really interesting stuff going on in crypto space. It's really the one area when I look out across the landscape of global macro financial economic kind of environment. You know, this is the most interesting and attractive area in my opinion, and I think it'll continue to have big growth, a lot more growth going forward, and prices and all these assets should reflect that over time, I think. But you know, going back to the legacy systems, man, it is really confusing out there right now. I know I've talked to a bunch of people on Slack and just personally friends and family of mine who, you know, have been in stock markets and watching financial markets, not professionals, but have been watching this stuff for a while, and everybody's kind of got a weird feeling about everything because nothing really makes sense. And a lot of that, I think, we've talked about this before, a lot of this asset price stuff is based on the US dollar and its status as a reserve currency and, you know, how it's performing. And the dollar's been pretty damn confusing as well.
Yeah, I agree. It's funny you say weird because I was just thinking like, okay, the only way I could describe this is it's freaking weird. Right. You can't find, you know, it's hard to find trends. It's hard to know what's up and what's down. Mm-hmm. There's so much intervention. There's so much manipulation, and there's so much confusion and people trying to stick to things that have worked in the past that no longer work. And man, it's a twists your mind into like knots, man.
It does. It really does. It's strange. You know, I think I'll just say this before we really dig into the nuts and bolts of the dollar and commodities and stuff. But I listened to an interview with Eric Hunsader of Nanex, the Chat with Traders interview. He talked a lot about high frequency trading and, you know, kind of incestual relationships between institutions and regulators and this kind of stuff. And, you know, I think a lot of what we're seeing in the financial markets as far as day-to-day trading activity has to do with these kind of market structure issues. I highly recommend everybody go listen to the interview, Chat with Traders, with Eric Hunsader. But, you know, it just kind of, I think that the title of the episode was like rig markets, regulators, and something else. And I tweeted out the subtitle should be, or why stop runs are the new normal, because I think this is why a lot of people don't get it, because the market is not trading fundamentally. It is pure technicals, and they are running stops and taking people out of the market, and it's just killing them.
Man, wow, yeah. It's so nuts. Like, yeah, you described it pretty well. So
yeah, so I mean, you know, yeah, that's the stock market. You know, it doesn't make any sense. But this is happening in the dollar too. I mean, the fundamentals, like we've talked about for probably half a year now, have said the dollar should get stronger. The fundamentals are there to back it. But we also talked about in March this whole, you know, China, maybe there's a collusion kind of thing going on to keep it down. But now we got the technicians coming back out. We've talked a little bit about this. Could it, you know, is it looking like this thing's starting to bottom? We could head up.
Right. So let me do a screen share really quick. 1 sec.
Yeah.
All right. So let me start with this really quick, because I thought this was really interesting. I found this article. So here's the headline: Japan to intervene if yen firms to 90 to 95 against the dollar. So we're talking about if the yen strengthens against the dollar. Immediately, as soon as this came out, the dollar strengthened. So they're using, now this is just verbal intervention. They're not even having to do monetary intervention right now. But at some point, this could fail, and they may have to go back to monetary intervention. But in the meantime, we are still seeing the technicals of the dollar play out, but so precariously, right?
Yeah,
like it's
really.
So this is that 30-year chart that I always reference, because I think it is the chart of all charts right now in the global macro scene. This downtrend, we've surpassed it, we broke it, and we're starting to, I thought this was going to be a cup and handle. Let me kind of zoom in here to this guy.
Ooh,
and that broke. The cup and handle seemed to fail. But what didn't fail is this bottom trend line. This is the bottom trend line of the 30-year trend here.
Yeah, technically speaking, that thing is a huge trend line. I mean, a trend line like that is going to be respected.
Yes, exactly. We had a little bear trap here. See this guy right here?
Yeah,
I think it is. It's just so perfect. I mean, it just bounced. Exactly. It just bounced right off of that. It's just resting right on that support. So I could see this. I got this painted now as like a bull flag, and I brought this up in the Slack. But just for people who are watching who aren't in the Slack, I wanted to kind of go through. Now we might see a bull flag play out here, and it could go on for, you know, this goes only to the end of 2016 into 2017. This could go for a little while. And, you know, I wouldn't be surprised if we see it bounce through and through here. And then it's got to break somewhere, you know.
Sure.
It's either going to be up or down. And the fundamentals tell me that it's going to be up, because, you know, at the end of 2015, I just read an article last week, I think it was, or maybe earlier this week, from the BIS or the IMF. I can't remember exactly. I'm pretty sure it was the BIS, Bank of International Settlements, said that at the end of 2015, still $10.5 trillion worth of dollar-denominated debt in the world, just resting.
I found that surprising.
Yeah, I did too, because before I read that, I was starting to, you know, second guess, maybe this thing falls, maybe I'm wrong. I started thinking about, okay, maybe there was this rolling deleveraging that happened over time, which is why we got so much chop in here. And you know, and maybe they've taken care of it, they've restructured, and things are gonna be not as hectic as I thought. And then I see that, and I'm like, nothing's changed. Nothing's changed.
Nothing's changed.
And this is their time to do it. If they're going to do it, they need to do it right now. And they're not. No one is really addressing it. They're just, again, kicking the can down the road. Like, so the this whole, we've talked about the G20 summit where like a Shanghai Accord kind of thing but to me, that's a lose-lose situation, because if Japan and the US, I'm sorry, if Japan and Europe weaken, then the dollar gets stronger. If the dollar weakens, then Japan and the euro get stronger. And either way, this puts pressure on China. There's no way out. You're like trying to push down a balloon underwater, and that thing's just trying to explode, and or even like a dam, and little shoots of water start coming out of the side of the wall, and you gotta put a toe here and a finger there, and like sooner or later you just fall off the side of the dam and the whole thing just collapses.
Right.
So I just don't see a way out. I mean,
this is like, this is kind of the end game for floating rate fiat currencies always, right? I mean, if there's no peg to value, and you're just playing games with other countries' currencies, then eventually the big guys are going to have to get into it with each other. And you're right, there's no way out.
Right. And I think the goal now is to not be the one standing when the music stops. Right.
Sure.
So right now they're just trying to keep the music going, so no one has to sit down and be left standing, and then therefore no one gets blamed that's in office right now. I mean, that's all it ever is. That's all politics can be, is just a game of musical chairs, because we all know how it ends. So at some point the music stops and then it's over. Right. So I think we're closing in on that. I could still see this thing playing out another decade. I mean, they do have tools. They do have ways to, fight this off. Let's look at China, for instance. I mean, they do hold a lot of gold, probably the most gold in the world of all the central banks, and maybe short of Germany. I don't know. It's hard to say. But and I also don't believe that the numbers that China publishes, so they could have so many more tons of gold than they actually are saying. And they could come out on top from the end game anyhow. If the dollar collapses, gold prices go up. They've pretty much dropped one side of the balance sheet, all the debts, and gone with the other side of the balance sheet, which is all the assets, the gold.
Yeah.
You see what I'm saying? So it could play out like that. Who knows?
Sure.
But,
sure.
Go ahead.
No, I was just saying 10, people might go, oh man, 10 years, that's a long time. But, and it kind of is, but, the way that these banks and the way kind of political economy works, these things take forever to play out. So I think that's totally reasonable. Plus, just looking at that chart from a technical perspective, you're right. It could take another year, 2 years for this bull flag inflect. That might even be a falling wedge, which is even more bullish ultimately. So if you get another 2 years of consolidation, followed by, a year, 2 year rally, and then a top, and then a starting to roll over, that's 10 years right there, baby.
Yeah, you're exactly right. That's exactly what I'm seeing, the time frame wise, is that this plays out, could be a year and a half, 2. We shoot to, my target's 120, and it always has been, because of this guy over here, right? Like, I think we at least get to 120. That could take, the last bull run, this only took, I think, 6 months. This one here. It could be a 9 to 12 month run up to 120, because there'll probably be quite a bit of resistance on the way up. But then once we get there, it could be a slow rollover. It also could just be a huge drop, a very quick drop, because that's when the inflation, I think, that everyone keeps looking for will hit. Because at that point, all the dollars that have been printed and loaned out have come home to roost. And then, that's why we've had deflation, right? Because the dollars haven't been in our economy. They've been loaned out all over the world, and all over the world, we've seen rising asset prices. What's that? Inflation. That's the emerging markets. That's the commodities we've seen rising. And then you get a rebalancing. You get the deflation in the commodities, the deflation in asset prices around the world. And then at some point, the dollar has to inflate, because all that has to come back home.
Yeah, I totally agree. And so people we've talked about this a little bit in the past, but people might be asking, oh, crap, well, if the dollar's going to scream up to 120 over the next 5 years, then that means metals and stuff that have got to get crushed. Commodities are going to get slammed again. And for the most part, industrial metals probably would get slaughtered in that environment.
Industrial metals,
But
yes.
if we talk, we talk about gold and silver a lot on the show because we like it too. But we've talked that it is possible for gold to go up in conjunction with the dollar.
Yeah, absolutely. And if at the very least just stay kind of stagnant. Now, I don't see it falling because we're talking about inflation in currencies across the world as the dollar rises, right? They're losing their value, so they're going to be buyers of gold and probably Bitcoin. At least China will probably be buying Bitcoin.
Yeah, I agree.
If I'm correct, then we could see a big run up in Bitcoin. But so look at least in the short term with gold, we've kind of seen this play out. Let me zoom in here one sec.
Man, that breakout is pretty beautiful there.
Yeah, it is. It is. And so we had this kind of play out over the last, I don't know, what would you say? Maybe, well, it broke out last week, didn't it? Was it last week?
Yeah, it was last week. This whole thing, it was really like January 1st, 2016. People were like, "Oh crap, let's buy some gold." So that's when I think that's when the whole thing started.
Yeah, exactly, because that's when the markets kind of took a tumble.
Yeah, that's right.
And then so we had the run up in gold, and a lot of people were calling this head and shoulders, right? Like a shoulder here, head, shoulder, and they were all calling for the gold price to come back down. But I didn't see that. I saw this guy, and it played out exactly like that.
Beautiful. Now it's testing that support, resistance turned into support. That's nice.
Yeah, that's what I meant. Sorry. I put new resistance, but I meant new support trend line here. Yeah, this top line here could now be support. And, I do think it could still pull back. I think gold could bounce all the way down to 1250, and it may keep bouncing on this trend line for a little while. But I think we still could see a large move up. But in the meantime, I could see silver trying to play catch up. So we looked at this chart, I think, last time we talked. Let me just pull down here. Yeah. So you remember this guy?
Mm-hmm.
So wherever there's been like big gaps, like right here, they tend to close up over time, right? There's a pretty good correlation, and where there's a big gap, there's a nice close up over time. So what we've seen is silver try to make up some ground like we predicted last time. I think we were around 16 last time.
Yeah, 16.
Yeah, and we've definitely we hit 18. We hit some pretty hard resistance there.
Mm-hmm.
Pulled back some. But gold is kind of going up too. But I think in terms of a percentage move, silver is up more than gold over that time. Would you say that's accurate? I can't.
It has, but now it's kind of it's almost back to the old spread.
In sync.
Yeah, I mean about a week ago when silver was up at $17.50, $18, it was getting close. But yeah, I mean it's widened back out now. So I think silver again has to catch back up again now.
Yeah, so I could see that's what I was saying, is that gold could take a pause right here, maybe retest that 1250 sort of around that area support line right here. And in the meantime, silver could play a little catch up. And maybe get really close to 20. I could see it going to 20. I think the fundamentals say 20. But we do have to face the dollar here too. And if the dollar keeps moving up, then at least in the short term, I think gold and silver could come back down a little bit. So we're just talking about probabilities, but I could see a scenario, where silver runs up to 20 while gold takes a pause, and then they could go up hand in hand from there. Yeah, and they're in a little more sync than what they are in right now.
Definitely, I could see that. Even just looking at the chart here, technically speaking, it looks like they could bring it all the way back down to 16 if the dollar does rally here up into the top of that wedge. Then I could see gold and silver pulling back. Silver, we've been talking about it in the Slack, and so I've been kind of caught up on it as far as charting. And it looks like 16 to 1650 is where you'd want to buy for the next leg up. But it could pull back down there. You're right. It's had both gold and silver had a really nice run. So the consolidation down there might actually be healthy.
Yeah, I agree. And this is the chart I was looking at. Yeah, that's a nice gap. It could pull back. You see, we're testing that $17 support right there. It could easily break that, I think, because it's fairly low volume compared to this run up here. Yeah. So we could break back down, and I think consolidation in here is making sense. What is that thing? So we could maybe buying in this area, like you were saying, 16 to 1625 might be a really good idea.
Yeah, that might be nice for that red up to 20, because I think that's happening this year. I think you see a 20 handle on silver at some point during
Yeah.
2016.
Yeah, man, I certainly hope so. That'd be just beautiful.
That would be great. I mean, you know, I think my dad has a bunch of metals. We got him into Bitcoin and metals, you know, years ago,
Nice.
and silver, you know, around Christmas time was so low. It was like $12 or $13 an ounce. And so my dad just gave me and my brother a bunch of silver. You know, he's just like, oh man, this stuff is just almost worthless. You know, it's almost like he didn't even want it. And I mean, literally, like that was almost the bottom. He gave us a bunch of silver, and it's like, you know, it's up like $5-6 since then. So thanks, Dad. Appreciate that.
Yeah, yeah. Well, he'll be calling you back when it's around 45, $50.
Right. Yeah.
Like, hey, you remember that silver I gave you? You know, help your old man out here a little bit.
I'll be like, oh yeah, I remember it. I got it.
Yeah, I remember.
Right. So I think that's, you know, I agree, that's looking good. As far as fundamentals, and I think technically speaking, gold and silver, you know, if we can pull back, hold that support, you know, we're looking good, even if the dollar does rally here.
Yeah, exactly. If you know, it'd be really interesting if the dollar does start to creep back up, and we keep holding around the same levels for gold and silver. However, I mean, that would be awesome. But however, you have to look recently as the dollar has pulled back. We've seen, you know, coinciding with that, that's how gold has moved up, right?
Yeah.
So people are used to, or at least what's fresh in their minds is 2009 when people were preparing for U.S. dollar inflation because they were going to print. So they associated dollar inflation with, I need to preserve wealth in gold, right? So, right. And that worked for a minute. And so that's fresh in people's minds. So when you get moves like this in the dollar, I think there's gonna be a high correlation, an inverse correlation. What is that? Negative correlation.
Yeah.
In gold and the dollar, at least for the short term. So we may not see dollar and gold go up together yet, but I think it's coming. I do think it's coming.
Cool.
And the last thing, yeah. But the last thing I wanted to look at, just real quick, is just the oil. So I tried to paint like a nice resistance area here, and there's probably a lot of resistance in this area, the 50 to 55. I mean, it's got to break this guy first, I think, and you know, I think it could break it, and I think ultimately make it up to 55 before it just gets slammed back down.
Wow.
Back down to all time, or to this same area. I think it's possible, but we could also just get rejected right here. I mean, especially if the dollar keeps creeping up, and you know, if stocks start to take a turn down, you know, you could easily, because I don't think the fundamentals are there. I just don't see the world consumption there. Not to mention the fact that here's the other just headline I wanted to show you. So Iran is now out of their what was it? Oh my gosh, my mind just went totally blank. So basically, they had some sanctions. Yes, thank you. That's the word I was looking for. Thank you, brain. Iran has now they're past their sanctions. They're out of the sanctions. They've increased their output, and we're back to pre-sanction levels. So everyone was talking about the oil sands fire in Canada and how that affected about 1 million barrels a day supply. So that's why we've seen, I think, a recent rally in the oil price as like a sort of preemptive measure to like try to get some gains out of some news. So that's why I don't know that this is a very healthy rally. Not to mention the fact that supply is about to go way up with Iran coming online to pre-sanction levels. Yeah. So this thing, I don't see the fundamentals changing, and in fact, the supply is increasing. Yeah, that's not a good. No, it's not a good mix.
Not at all. Supply increasing. I think demand is decreasing slowly globally.
It's at least stagnant. That's at
least stagnant. Right. Let's call it flat line.
Yeah.
And then, so fundamentally, it does support it. The technicals. It looks like a pretty nice V bottom, but again, we're running into resistance here. Above 55 would almost be unheard of. But the reason I'm kind of thinking that maybe they will break this resistance and run it up there, even though it makes no sense fundamentally, is because about just an hour or two ago, I read a new article at Zero Hedge, that says that Glencore, the big commodities trader,
Yep.
now owns like 30% of the Brent crude futures market. And so
Oh
they
my
might
God.
be trying to corner the market and just slam this thing up and just wash
Well, they need
institutional
to.
stops.
They need to avoid bankruptcy based on the way that they've just gotten smashed with their stock price because they were so heavily levered in the copper industry, and that just really put them in a bad spot. I think it's copper and iron ore that just really got them in a bad spot based after this last huge commodity price deflation. So they probably have to recoup some revenue for some way to stay afloat, at least in the short term. So
Yeah.
that's really interesting. I'd like to get a hold of that. Maybe post it in the Slack so we can check it out.
Yeah, and actually, I might post a link in the YouTube notes with the Chat with Traders interview as well.
Yeah,
but
perfect.
But I read that when a big trader, they are in some trouble, but I'm sure they still get plenty of liquidity from central banks. If a big player like that is buying up a market and trying to manipulate prices, they will become highly illogical. They'll go much higher or lower than you think they will. So, maybe they spike this thing back up to 80. I don't think so, but I wouldn't rule it out if somebody like them are playing in the sandbox with that amount of cash.
Yeah. I don't. It'd have to be a short run, I think, because if the fundamentals aren't there, it's not going to stay up there. But it might be able to bail them out if they can get it up there. So
Yeah, that chart, that $70, that top, kind of that real nice rounded top around $70.
Right
I
here.
mean, you watch those stops. There's just a ton of liquidity right there. I bet that could really pay off. But anyway, yeah, the fundamentals are going to be pushing back against that. So oil is going to be interesting to watch. It's kind of a trader's market now. Doesn't really trade on fundamentals.
Yeah, exactly.
Yeah. So anyway, man, what a great show. We covered so much today, and I felt like everything was really interesting and necessary. To talk about given the environment today. So thanks for the time, Rich. Bitcoin looking good. So hopefully everybody will enjoy their weekend.
Oh yeah. Well, thank you, Adam. I really enjoyed it. We got to get back together on a good timeline so we don't have to pack an hour's worth of content into our show.
That's right. Get back to the 30 minutes. Well, I enjoyed it, man. Well, have a good evening, and we'll talk to you next time.
Thanks, bud. You too. Bye.
Cheers.